8:31. I'm gonna call this Finance and Economic Development Committee meeting to order. It's Tuesday, January 25th. We have a published agenda. Are there any changes to it?
Move to approve the agenda as published.
I'll second it. Any discussion? See none. All in favor of the motion signify by saying aye.
Aye.
Anyone opposed? The motion carries. We have our Deputy Mayor Miller is just running a couple minutes late, but we have a pretty full agenda, so we're getting started, and he'll join us here in a second. First up is to elect our committee chair. Lenny, what are you chairing from other
This is my first meeting of the new year, so I don't know. I've got all of them today. So, but don't you typically, as the mayor, chair finance?
I have done that historically. So,
I would move, or not. I would nominate the mayor to be chair.
And I don't think that requires a second. Are you? You're not interested in being chair?
I mean, I can chair something else. Doesn't matter. It's usually been the mayor for this particular committee.
Sure. So then I'll close nominations. All in favor of electing me the chair of the Finance Committee, signify by saying aye.
Aye.
Aye. Any opposed? Then that motion carries, and I will be the chair of the Finance Committee for this year. Next up on our agenda is the fourth quarter 2021 investment report. Over to Troy.
Good morning, Council. As become tradition, we come to this committee to give you, well, by policy, annual reports related to investments, but we have been presenting twice a year. We're still a little bit new to this process. As a reminder, we started investing our core funds back in 2018, so it's only really been a few years, although it sometimes feels a lot longer. The report's very similar to what you've seen in the past, with the sections that, the main sections of the report, which include a market analysis. There's a compliance section to make sure that our investment portfolio is in compliance with our policy. There's a section on the various changes that happened throughout the quarter. And then there is just a kind of a summary of invested funds and performance and that sort of thing. So in short, the portfolio, again, outperformed the strategy benchmarks. However, they're both negative numbers, but the actual performance was a lower negative number than the benchmark. So the core fund performed at a minus 0.45%. The benchmark or the target was a negative 0.55%. So again, both negative, but we did outperform that. In terms of the market, even at the time that this report was put together, there's been a lot of changes. It's been a kind of a crazy start to the 2022 year, even looking at the two market performances of this week.
So I'm sorry, Troy, can I just ask a quick question?
Yeah.
Does a negative 0.45% mean that we actually lost money on our investment?
No, that is netted against the costs of the advisor. So we pay the advisor separate from our investments, and we pay a fixed amount of I think it's $42,000 per year. So we don't pay on percentage. But that does get netted into the overall performance of the portfolio. So no, we did not take a loss. The only time we would take a loss is if we sold investments early. If we had a cash flow issue or an opportunity that the city saw that it wanted to take advantage of, and we had funds tied up for a longer period, we could sell, and that could cause a loss just because of the market valuation. But that's very rare. In fact, I've only done that once in a almost 30-year career. Sold investment.
Okay, yeah, I was just trying to figure out how that was being gauged.
Yeah, that's
a negative number. It seemed like that mean a negative. We were in a loss there. So
Yeah, in fact, the yield of the portfolio for the fourth quarter was 0.62, a positive 0.62, which is actually an increase over the previous quarter. So, but again, it's netted against those costs of the investments. Back to the market. At the time that this report was put together by our investment advisor, the Federal Reserve outlook was looking at 3 rate increases for 2022. I believe that's now 4 rate increases that have been priced in the market, with what they call several hikes, additional hikes in 2023-24. I believe what happened this week is there was some speculation that there would be more rate hikes in 2022, even more than 4, and they would happen sooner. But I think that has been back. We're back to the 4 rate hikes. So hopefully that stabilizes a little bit. But regardless, we're really looking at a lot of ups and downs throughout the markets. In terms of GDP for the third quarter, we don't have the fourth quarter GDP. It grew at 2.3%. Although it was positive, this is actually considered a disappointment. But there is some expectation that the fourth quarter will rebound just because of what we're seeing from strong consumer consumption, especially early in the fourth quarter. So we are, again, expecting GDP to be rebounding in the fourth quarter. And we talked about the overall yield of the portfolio at 0.622%. It's an increase from about 0.5. For reference, our overnight rate is right around 0.09, so about 7 times. We're about 7 times higher in our core. So although the overall number is pretty small, it's actually really good performance compared to the overnight rate. In terms of duration of the portfolio, the fourth quarter duration was just over 2 years. The benchmark is about 2.2 years. You might remember from the September meeting last year, we talked about some changes to that benchmark. We moved from a 3-year benchmark to a 5-year benchmark. So we're stretching out that duration. We are under the benchmark just because we're in that transition stage to get to the 5-year benchmark. So, expect future performance to be closer to the benchmark. And then we kind of talked about this a little bit too with the mayor's question, but if you look at the quarterly report, it shows an unrealized loss of about $535,000. That, again, is unrealized. That will not be realized unless we decide to sell all of our investments today, and just because of the market conditions in terms of where rates are going. So again, it won't be realized unless we actually sell investments before their maturity, which, as I stated, is very unlikely. So that is the quarterly report for the fourth quarter for the investments. So although we're not earning as much as we have here in the last couple of years, it's still a positive in terms of meeting and exceeding our benchmarks. So I'll turn it back over to the committee for any questions you might have.
Are there any questions? I guess my only question is with interest rates going up, you'd think that we'd have a gain and not a loss.
Well, it's based on market value. So let's say we bought an investment at 1% and the market is rising, and let's say it's 1.5%. In the market, our 1% instrument isn't as valuable as a 1.5% instrument. So to sell it, we would actually, people wouldn't be willing to pay as much for that. So they wouldn't pay face value for a 1% investment. So yeah, it works the opposite of logic, really.
So based on when we purchased it, and then I got it. Okay. And so how much of our portfolio is that way? And do we do that because we knew interest rates were so low at the time?
Well, no. I mean, we keep to a laddering approach. So, as you know, we could try to guess the market, and we shouldn't ever do that with public funds. So you stay consistent with your strategy no matter what the market is doing. And you have a balanced portfolio throughout that period, which in the end balances itself out. So it's really the conservative approach to investing. So we were buying the best value instruments at the time. So some of these, most of those investments in the 0 to 3 benchmark, the duration's about 1.4 years as an average.
Mhm.
So it's going to take us 1.4 years to get to that 0 to 5 benchmark, essentially. It'll be a little bit less than that, but that would be the longest. So yeah, it's going to kind of ebb and flow with the market. And we buy investments as they mature, we reinvest without thinking about trying to, game the system in terms of, market timing.
Sure.
It's not possible. The best investors in the world will tell you that if you try timing the market, you're going to be wrong more often than you're right. It's just not possible to do.
Sure.
I mean, the long-term strategy is solid. So you just keep doing exactly what you're doing is the right approach, in my opinion. Anyway.
I was just trying to figure out what that correlation was there, but obviously we made the investments. We're just let them ride, as we go
Till they mature.
until they mature, and the only reason. So obviously it's an unrealized loss because we wouldn't cash those in until it matures. So it makes sense. I was just trying to figure out.
I only mention it because it's a big number and it's a negative number, but didn't want anyone from the committee or the public to think we actually took a $500,000 loss.
No, if it was a realized loss, we'd be a lot more concerned.
Yeah. Do you have any questions, Deputy Mayor?
No, I don't have any questions. I understand what he's saying, and I've been watching the markets too.
Yeah, we all have for sure. Then let's talk about the investment strategy and policy updates. Our next agenda item, Troy.
You bet. Thanks again. So as historically we've developed a portfolio strategy each year. That's developed between our advisor, which is government portfolio advisors, and staff. We have a internal investment committee that analyzes and makes suggestions to you and the rest of the council. We develop our policy. We suggest changes throughout this process, and we're going to do that again this year. The council last adopted the investment policy back in May of 2020. I did email that out last night. I apologize for not having that in the agenda in the first place. And for those of you in the public, you can find the investment policy under Resolution 1089. It's on the City Council's webpage under Ordinances, Resolutions, and Proclamations. So we always look at, in terms of policy changes, we look at a number of guidance bodies and obviously RCW. That we really start with RCW, what is allowed by state law, and then we really look next to the Washington State Investment Board for guidance. But there are a number of other associations and groups that we do take guidance from. So for this year, we had 5 changes, 3 of which require a policy change to implement. 2 did not. As I stated, we did come before this committee late last year to get guidance on the 2 changes that didn't require the investment policy update. And those were related to the 0 to 3 benchmark, moving to the 0 to 5 benchmark, which, in the previous report, we have implemented that. Along with that changing of the benchmark, we increased the amount we're investing in our core portfolio to take advantage of that extra yield that was coming from that benchmark. So we did take more of our overnight monies and put it into this longer range investment part of our portfolio. So we have implemented 2 of the 5. The kind of final stage in this year's strategy is to come before you and talk about some policy changes. And these are all either coming from updates to RCW or the Washington State Investment Board changes. There's two that I think are relatively simple. So maybe I'll tackle those first. The first is really how we're categorizing U.S. agencies and what we would call government-sponsored agency bonds. At the state level, they're combined now. So when you think about agency bonds, these are instruments that are backed by the full faith and credit of the U.S. government. So you think about an example would be the Federal Housing Administration, Small Business Administration, so those types of bonds. The other category is government-sponsored bonds. Examples of these would be Fannie Mae, Freddie Mac. These don't have the same guarantee as the agency bonds, but nonetheless, they have been combined into one category. So for consistency's sake, the policy recommendation would be to combine those two categories within our investment policy as well.
Troy, why would they combine them when they don't have the same backing?
I've been trying to figure that out myself. It's I think it's really in terms of the rating, they're basically the same. It allows us to, so there's a little more restriction in terms of the percentage of portfolio in these what I'll call secondary instruments. Fannie Mac or Freddie Mac and Fannie Mae, they're very, very common. The chances of default are probably not any different than a U.S. backed instrument. I think it's really just for portfolio strategy more than anything. The other area that I think is pretty straightforward is under commercial paper. These are promissory notes from private companies or publicly traded companies. The recommendation there is to actually increase the minimum rating. So obviously looking for a little stronger financial backing in terms of those instruments. So pretty straightforward. The policy change I'd like to focus on the most, just because we had a little bit of discussion about this back in September, and it's certainly worth a little more conversation before we actually make this proposal in terms of change. And it's related to corporate notes. These are very similar to commercial paper. These are probably more closely aligned with a government bond. So these are longer term instruments issued by corporations. And the recommendation is to, the two main recommendations is to set the minimum rating down to single A. It's currently at double A. Along with that is to increase the maturity to 5.5 years for this specific type of investment, and this would be up from 5 years. The main reason for that is, for whatever reason, a lot of corporate instruments have in the 5-year range, it's 5 years and 2 weeks, 5 years and 3 weeks, 5 years and a month. So if we have a 0 to 5 maximum, we're going to miss out really in that 5-year window for these types of instruments. So that's the reason to look at an increased maturity there. It does change some of the total percentage thresholds in terms of portfolio. There's no change to the AA rated notes. It would stay at a maximum of 3% of the total portfolio. The single A rated notes, if we choose to update that policy, would be limited to 2% of the total portfolio. Another change is currently we could only invest in U.S. and Canadian corporations, and that would be lifted as well. And again, these are all consistent with what the state RCW allows, as well as what the Washington State Investment Board has adopted. And let me share a screen here that I think would be helpful. So hopefully you can see this list of corporations. This is back in fourth quarter, so this could be out of date, but I think it's good for discussion purposes. This is the list of corporations that meet the threshold under single A rating. You can see these are household name companies. Make that a little bigger for you. These are the top performing companies, most stable companies in the United States. You know, there's a lot of financial institutions, banks, you know, Toyota, Caterpillar, John Deere, Visa, MasterCard, Amazon, Microsoft, Apple. If you look at the AA rated companies, or, you know, that have at least a AA, it's 14 companies. So under current policy, we're only allowed to buy corporate notes from 14 companies. By going to single A, it would expand that by 26, so there would be a total of 40 companies. You know, and there's a constant watch on these companies. If there's any rating changes or any outlook changes by the rating agencies that would, you know, trigger us to certainly monitor these companies if there's any changes. We, in the current environment and even the recent past environments, we haven't had a lot of opportunity to buy corporate instruments. I think we've only bought 3 in the 4 years that we've invested. We obviously want to look for additional yield that warrants the minimal additional risk. And just like I said, in the last 4 years, there just hasn't been a lot of opportunity to pick up that yield and taking on that little bit of extra risk. You know, what we've done in the past, you know, we've really eased into some of these more, what I would call a little bit uncomfortable policy changes. You know, I would recommend that the policy be updated, but we certainly engage this committee and before we jump into those single A rating investments, you know, we want to be positioned for flexibility in case there is that additional yield, but just because we have it in a policy doesn't mean we actually have to invest in those types of instruments. But, you know, I certainly understand, and, you know, Scott and I, as well as the rest of the investment committee, we probably share the same hesitation that the council does. So, you know, I'll turn this back over to committee for discussion. But, you know, that is the recommendation from our advisor, and that is what the state is doing as well. So, you know, I'll turn it back over to you for direction, questions, any sort of.
Well, it is concerning, and you know, in the staff report it says there's no disadvantages. Well, the disadvantages is that there could be a loss of public funds if, you know, things didn't go right. And then the market's been so volatile, it just not quite sure. I mean, I'm not sure how comfortable I would be in investing large sums of public dollars into some of these companies, but I'll open it up to the rest of the committee for discussion. What do you think, Lenny?
Yeah, I'm not overly concerned. I mean, I am, let me rephrase that. I have concerns, but I'm not overly concerned. I mean, these are all, those A-rated companies, I mean, these are all, like you said, these are household names. These are big companies. These are not in any way fly by night. I agree with the mayor that it should be limited, but I think you said it was a max of 2% of the funds that could go that route. So, I mean, I'm comfortable with that. I have no issue at all with changing the duration to give us that more flexibility to be able to go to the 5-year. To me, that one's an easy one. I would support this, but I would want to watch it very closely. I mean, I don't know that I want to hear a report once a year. I think I'd want you to come back to us more often, especially if we're going to that single A, and just, I want to just, I think we need to keep our finger on that pulse and just make sure we're watching it very closely.
Yeah, I definitely want to be updated before we made the investment, and then, you know, regular updates for sure. So we're talking about going from 5 years to 5.5 years on the maturity rate as well, right?
Correct. And that would be just limited to the corporates.
And so what is 2% of our total fund? That's not a small dollar amount.
Like 3 million, 4 million. So, I mean,
Real number.
it's definitely a big number, but it's small in terms of the overall portfolio. So yeah, I mean, you know, the state obviously recognizes the same risk, and you know, by making sure that we're limited into the total amount of the portfolio that's invested. I don't believe we own a single corporate instrument at the current time. So that, like I said, it's been a pretty rare instance so far in terms of market conditions, but you know, that could change. And yeah, definitely I would support coming back to the committee before we, started to buy single A rated
Which
corporate instruments.
which still focus, since that we aren't investing a lot in a corporate instrument, as you said, wouldn't you still go towards the AA or AAA if you were going to invest? I mean, I don't see a scenario why, unless there's some feeling like the stock's real hot, but then now we're playing with.
Well, that's a great point, Mayor. That's so we look at yield versus risk, right? So a AAA rated instrument is going to earn less than a single A rated instrument. It's no different than the city's bonds that we issue. The higher our rating, the less interest we have to pay, and it's the same for corporates. But we have to make an evaluation whether that extra risk is worth the yield. So if you're gaining 0.01% and you're going from say a AAA or a AA to a single A, that's not worth it. I mean, we're talking about dollars, in terms of a difference. So we wouldn't take on that extra risk. So, as a reminder to, you and the public, yield is the last incentive in terms of our investment policy. The goals of our investment policy are safety of the funds. We never want to lose public funds. Number two is the duration. We want to make sure we have cash available when we need to spend it. And number three is yield. So that's always last in terms of our evaluation of what we invest in. So always first is the safety and protection of the funds. So
you're not making a good argument on why to go to a single.
Sounds like you're arguing against your own policy there, Troy.
Yeah.
Well, I mean, you do evaluate that, but we're not saying that single A is a dangerous or risky investment. It's just more risky than a AAA rated instrument. That's what we're saying. And the yield would have to, be at a level that it would be worth taking that, small level of additional risk. And
it's worth having.
Yeah. Oh, go ahead.
I mean, I think it's worth having as an option, but again, at this point, like you said, we don't even have anything invested right now in AA or AAA, so it's not like we're going to run out and start dumping immediately take 2% and put it into single A. It's going to be something that's available if the opportunity is right, and that makes sense to me.
I was going to make one, maybe two comments. So one, I think our advisor provided this flexibility just because in this era, at least 2-3 months ago, just basically rock bottom interest rates, right? So it was trying to give us a little bit more options to look at for the portfolio. And if I recall right, now with going from a 5 to a 5.5, we really did have limited opportunity even to buy a corporate paper. The frequency is not as much as you think it would be. So that's why Troy was saying, I mean, we had one opportunity to buy some Apple, but I mean, I think we had like a 4-hour window and it was gone. So
why is that? Is there only so much available for?
Yeah, it's very similar to issuing a government bond. So, if the city were to issue $5 million in bonds, we wouldn't sell 6. As soon as the 5 million was all purchased. Yeah, and at that time it was there wasn't a lot of corporate paper out there. So when an opportunity did rise, and it was one area that you could pick up yield, within the portfolio. So those did go extremely fast. And then then the market just dried up. I don't know if that's an indication of the level of capital investment that's out there in the private world.
Mhm.
But yeah, it's not available at this point, and they're just companies aren't taking on debt at this point.
Deputy Mayor, do you have anything?
Oh, yeah, I think that, having an option and exercising an option, we obviously that's two totally different things. And, shifting from, a period of, near capitalization to a full cap position, by extending the time, that's kind of a no brainer. It sounds like the goal or objective here is to be able to capitalize on companies that are providing a yield with, maybe they're on their way up to being a AA or a AAA company. And we can, I don't want to say ground floor it, but you know what I mean? Be able to realize a gain on, something that might be a little more risky that is turning into a lower risk. But my question is, do we know what motivated or pushed, the state to open this door or window? How did they end up trying to go this direction?
I don't know the fine details of that, but I think Scott is correct. It's a way to find additional yield without taking on a whole lot of extra risk. Just being able to be flexible in today's market, I think, is another consideration. Like I showed, there was only 14 AA rated corporations in the United States. That's not a lot to choose from. And even going to single A, that only gets you to 40 companies in the United States. So, I mean, we're talking about, the top of the top in terms of stable, financially strong companies. So yeah, I think it's mostly about, flexibility and yield, additional yield.
And so
Yeah.
I'm sorry. Go ahead.
No, I was, it's by that rationale, it almost sounds as if, hey, we've limited your ability to assess your own risk for, forever. And we kind of want to open up the opportunity for you to, do some more risk analysis and make some riskier moves
But
for whatever reason.
Yeah. So this is Washington State allowing this. Before, if we didn't even have this opportunity on our own because Washington State didn't allow it.
Yeah, that's why I'm like, what changed?
Yeah,
Exactly.
exactly. So that's, we can't invest in things that we're not authorized to invest in. So yes, it was a change at the state level that actually allows it by state law.
When did that happen?
I'm not sure exactly. It would have been the last session. So
Okay.
2021 session. I don't want to make, just a flippant comment, but the US government's rating is only AA. And that's where the majority of our investments are. So, I mean, I hope you take that with confidence that, the strongest investments out there are US government rated instruments, and it's only AA.
I think we all remember that day when it went from triple to double and the rock and the shoe comment, or it's bothersome, I think is what it was that day.
Well, especially when you can get in a situation where like, we're not going to pay for our debt any longer. You should never put that in the hands of politicians like that. Is there any other discussion? Then can we get a recommendation to move this to full council?
So we need a motion on it then? Okay, I would move to forward this to the full council.
I'll second that.
It's been moved and second to forward our new investment policy amendments to the full council. Is there any more discussion? Seeing none, all in favor of that motion signify by saying aye.
Aye.
Any opposed? That motion unanimously carries. Thank you, Troy.
Great, thank you. And I applaud your conservative nature on this.
Then our last agenda item is our BIPOC business startup training program.
Oh, good morning, Mayor, Deputy Mayor, and Councilmember Greenstein. Speaking of investments, investment strategy, I'm bringing forward a proposal and recommendation of a different type of investment, investing in our local community and specifically our small businesses and specifically those small businesses that are minority based. So today we're going to give a little bit of a briefing, and we're looking for a recommendation from this committee to the full council to authorize the reallocation of unspent funds from the 2021 Scale Up contract to establish a BIPOC business startup training program and authorize the city manager to enter into a contract with Thurston EDC to manage that program.
I'm curious, did this go in front of our Commission on Equity before it came to us?
No, not yet. It will. We'll be able to brief them on it, but it was a matter of time at the end of the year. And I'll give a little bit of background on this project, and I'll turn it over to Wesley to kind of talk about some of the program details that he's been working out with Sean Moore at Thurston EDC. So again, kind of a little bit of history on our scale up contracts. For many, many years, the council has entered into a contract with Thurston EDC to fund scholarships for local businesses in Lacey to receive training through the scale up program. And that has been very successful. About 2 years ago, the state of Washington Department of Commerce decided to fund the local scale up programs across the state. And so what that did is all of a sudden our funding was not necessary to provide those scholarships. So we worked out an arrangement with Thurston EDC to change the focus of our funding, our $30,000 a year contract award, to offer a upper level scale up class program, a 200 level series, if you will. So those individuals or businesses that went through the initial scale up program, they can go on to the upper level for additional training and guidance. Over the last year, coming into November and December, we realized that we didn't have a lot of takers on that 200 series of scale up. We ended up spending or provided about just around $3,200 in scholarship funds. And that left a remaining balance of just under $27,000 of unspent funds. And we don't know exactly why we didn't get the participation that we were looking for. It could be a number of factors. One, the advertisement promotion, or two, the continual leg of the pandemic, and just time for business owners to stay away from their businesses to go through the training. So going forward on that scale up series, as long as the state continues to fund the basics, we're going to have a contract for 2023 to continue that 200 series and monitor and assess to figure out if this is truly hitting the mark or if we need to repivot for 2024. But switching gears to the last year's contract, the 2022 contract with those remaining $27,000, we were looking at to refocus those dollars to tailor a curriculum and program specifically for our minority business owners, a BIPOC training series. And so this is what's before you this morning is a staff report and draft contract to reallocate those 2022 dollars into this training program. You mentioned, Mayor, the question about this has come before the Equity Commission. And it hasn't, because this is all coming forward fairly quick to get it set up for this upcoming calendar year. But we are planning to go back and brief the Equity Commission and also provide potentially some results of the first cohort series. So we will engage the Equity Commission moving forward. And with that, I'll turn it over to Wesley again. Oh, yes, Councilor Greenstein.
Just a quick question on that, Rick. Will you have it back to the Equity Commission before it comes before full council?
I don't think the timing will work out because we're looking to schedule it for the February, the 5th council session. Because again, we're looking to have a program in place and going forward as first quarter of this year, and we're having 2 cohort series.
So, and the deadline for it will be December of this year. So it shows that first round application deadline is December 15th.
Of 2022?
Yeah.
That have been changed, Mayor. It's actually cohort will start February 15th.
Okay. Well, you're going to have to update that that information. So I understand we need timing is essential, but I would recommend talking to the Commission on Equity. This is why we started the Commission on Equity, especially on when it comes to the outreach. One of the things that I learned while doing some outreach to the BIPOC community, business community, is the way they have traditionally taken in information is different than the way cities usually do that, right? Like, for example, when we did our funds, for COVID funds, we didn't have a lot of takers because the way from the BIPOC community, business community, because they didn't hear about it, because the way we traditionally push out information isn't the way they have received it. And so I hope there's some really good strategies going on, and hopefully some recommendations from the Commission on how this information goes out, because I think that is going to be really, really important. And it's probably going to take one-on-one communication, right? Actually going to the business, talking to someone, setting something up and explaining it, instead of sending them an email or a postcard, which I don't think will work in this circumstance.
Yeah, and that's the same understanding that we have in our conversation with our business owners in the community, our minority-owned businesses. And we've had some engagement over the last year and a half. Also, Thurston Economic Development Council has hired a BIPOC liaison, BIPOC business liaison position, filled that position. And with this program, we're also going to be coordinating with that person in order to do that outreach. But we're always going to be looking for feedback, how we make that better, because we do know that traditional methods, say an email blast or anything like that, that stuff does not work. And so it is a word of mouth, and we're going to try to continue to put that out, and also use various language and everything else to make sure we try to make those connections.
And so according to this, it's going to be BIPOC and veteran-owned businesses. Is that correct?
Yeah. Well, let me turn it over to Wesley, because he'll go through, because he's been working for a couple of months with Sean to develop the curriculum and how this program has gone, and you can talk a little bit about what that looks like and where this idea came from.
Great. Listen.
Right. So good morning, everyone. Just to share some insight, it is supporting underserved communities. So that's including veterans and BIPOC community members. And so we want to make sure that we are inclusive of everyone. And if there are, let's say, a non-BIPOC person apply, and if they're in the city of Lacey or a resident of Lacey and they have a business in Lacey, they could potentially get a scholarship as well. So we are very inclusive in that regard. It is a cohort model. So it's about 5 weeks, 1.5 hours of webinar training, and then another 1.5 hours of online self-direct training. And typically, what the background with this training is that during the pandemic for the last 24 months, we have a lot of fund coming down the pipe from the federal government, from state, from county, from city. And so my thought is, I was reading about Desmond Tutu, and he I read his quote that says, they come to a point where we need to stop pulling people out of the river, and we need to go upstream and find a way to see why they're falling into the river. And so I think that's really what we're trying to do here. Is there's a lot of people putting money to help these businesses already, but why are they in here? So I looked around, and Pierce County had a accelerator program up there where they train minority business on not startup business, but accelerate their startup. And so using that model, so this 5-week training is not only focused on the typical, business plan writing, that sort of thing, but really focus on how government works to support businesses. So specifically to the city of Lacey, how we support businesses. So for example, the site selection training, we will have a current planner to speak on behalf of the city of Lacey about the zoning issues, the ordinance, the signage, so that when they select a certain location, they know what are the limitations to that, or they know what are the rules and regulation around that. And so that's what we're trying to support them, is really share the public information that oftentimes they, even though it's public, they don't really get the chance to dig into, because limit in access to language or access to computer, whatever that issue is, we want to highlight and share those information to these entrepreneurs and startup business owner. So I think that's where I think this training is a little bit different.
So will we have this information like available? Say someone comes to our front counter who's looking to maybe start, get a business license for something. Do we have opportunities to engagement at that time to say, hey, thank you for getting a business license and be interested in, by the way, here's some free training to help you support your business.
Yes.
So we can get them at the, catch them at the very beginning, because this is it's a short time period where this information is going to be, useful. It's, really in that business is very early on. I mean, but once you've been established as a business, going back and telling you the way you should have done it, it's not, not quite as helpful as the way you should do it from the
Right.
Damn, I did everything wrong.
Hence why we tried the 200 series on the scale up. So, but yeah, one of the things is this information will be, how we operate with at the front counter is we inform everybody of these programs and tools. And so we look at everybody as an extension of outreach, whether you're at somebody at the utility counter or business license to the planning, permitting, and public works. So we make sure that there's information available so people can connect. So yeah, that is one of the strategies is part of that word of mouth and making sure that everybody on our staff is informed so they can connect people to the right places.
Do you need a motion, or is this just for information only?
I would request a motion that if this is something that looks good to this committee, to recommend the city council review and approve this proposal and authorize the city manager to enter into a contract with the EDC.
Sure. So I'll move that we move this on to full council with a recommendation that we reallocate the unspent funds from 2021 scale up contract to establish a BIPOC business startup training program and authorize the city manager to enter into a contract with the Thurston EDC to manage the training.
Second.
Moved and seconded. Is there any other discussion? Good work.
So when we say unspent funds, how much are we talking about? I didn't really see that.
It's about $26,821 to be exact. So
About that.
Yeah.
about,
Last year was a really weird year for business owners. I mean,
Yeah.
I know it was like business was good, but how good, there's so many unknowns, and we're just sort of riding the moment, right? I couldn't imagine probably sending my employees off to talk about, a program like this. It's like everyone hold on. Let's see if we can get through this year without a major disaster. So it doesn't surprise me that business owners weren't, thinking long-term on how to grow their business. They're just trying to make sure they can continue to survive. So
and just the mental exhaustion of having to be virtual all the time and all those different things. There's a lot of factors. But we've have on some early testing the waters, seen a lot of interest in this program. So at a future, probably not the next, but maybe the following Finance and Economic Development Committee will come back with a report of that first cohort and what we saw. And then also the Equity Commission's next meeting is on the 28th. And so we'll be requesting to give a briefing to them at that point in time too.
Last year, watching people, pivot to, changing their strategies on how, business flows, putting tents outside, tables outside, changing their signage to let people know, hey, we do have curbside and you can pick up and so on and so forth. Or you can dine outside, and watching those transition, those things have costs associated with them. And, watching people go through that, sometimes I just wonder, like, how much are you spending to make these pivots and moves, and how much is it affecting, your bottom line? Because, before, when you could just open the door and people could just come in, you didn't have to buy a $10,000 tent or spend $5,000 on new signs. So, I remember last year we had talked about, signage and helping small business with signage. I think we were trying to do something to that effect. Are we still doing that, or?
Yes, those temporary provisions are still in effect. We haven't had too many to take advantage of them recently, but they are there if they are needed for individual businesses.
Is that something that we can incorporate into this?
Yes, that'd be part of the talk presentation provided by our planning staff. And that's one of the nice things about this curriculum. A lot of times you'll have a trainer talking about generally everything, but in certain sections, we're going to bring in kind of the experts at the counter. So also that's another piece to reduce that trepidation or barrier of the unknown, that they get to meet somebody that actually does that and develop that relationship, so they see a familiar face when they come in the counter. So we'll have that information too as part of that particular class night.
So one last thing, and I just lost it. I had a good point and now it's gone.
Well, let me fill in the gap while you try to remember. Is that right? Okay.
Yes.
So, if this is, I'm looking at the timeline on this, and I'm just kind of thinking, starting a business isn't something that, you just kind of jump up one day and decide, you're going to do that. Oftentimes, you think about it for, 6 months, a year, whatever the case may be, and before you actually strike out and say, you know what, I'm going to do this. Are we saying in this case that, if you're going to do something like this, you're going to take advantage of this, you need to be ready to take advantage of this within this calendar year. So get done all your thinking and get going now. Am I missing?
I guess
something that's
what you're talking about is the criteria for people to do it. Right now, do you actually have to own a business? Because under the criteria, it says start business stage with less than 300,000 in annual. What if you haven't even got your business license? Do you qualify for this?
Yeah, so people can apply to the program from an idea all the way to having an actual business already, but it needs to be at least 300,000 per year or less. But again, we will EDC will work with those applications and figure out what's best for the program. But I think for us, we would like to see businesses that are on the cuff of either having a license already or think about locations already. And like Deputy Mayor said, they've been thinking about opening up a business 6 months ago. So they already have been thinking about it. And so, with people resigning from their job, they have something they want to do, whether it be a food trucks or open up a salon or whatever it is. This is an opportunity for them to then learn about what are some of the mechanisms the city offers to support that growth or that interest.
Great.
And in the long term of this program, my optimism, this is going to be successful. So as people start thinking about starting the business, they're going to have eventually awareness that they can catch the next available cohort that fits their timing. So if this is successful, and as we monitor that 200 series of scale up, we may be able to pivot, long term to this type of program. That's kind of the kind of a long term thought process that we have right now.
Yeah. Well, obviously it's going to take a lot of advertising. I know we're getting late on time. Lenny?
Just quick. So you're going to do 2 cohorts this year is the plan, right? First one starting in mid-February. Is there not enough time there? I mean, if we're starting the first one in February, isn't there time to do more than 2 maybe this year?
Well, we're looking at funding available, and we're using that within the budget of the unspent funds of last year. If there's a lot of demand, we'll report back to this committee, and then there always is opportunity to maybe look at other additional funding options for this year. And also we'll get, after the first cohort, we'll have a good sense of, does the curriculum need to be tweaked a little bit, or what do we need to see so we can kind of do that review and cast forward process.
Do you even think we can get 15 people signed up by February?
I think so. We've been testing the waters, and there's been a lot of interest, and I believe that we'll be able to get a full cohort. And again, that's the other piece too. If we don't fill up a cohort, that leaves extra money for scholarships to add additional cohorts too as we build through the year.
Great.
Be very interested to hear the report back after you get this first one going. It'll be
Yeah, I would request that as well. After you get through this first one, to give a report back on, on how it went. For sure.
good, the bad, and the ugly.
Yeah.
Hey, Rick, just real quick, I know we only got just a couple minutes left. You said you've been testing the waters. Is there are you saying that there's print material ready for this, or?
Yes, there's been some promotional material being prepared, and also just casually casting out and getting interest in the community. So there's been some interest in participating in this first cohort.
Gotcha.
There's a lot of groundwork that Sean and Mara, who's the BIPOC liaison, we created this program not out of our head, but really to understand what the community needs are. So we did a lot of discussion with the community, and I talked to some of the food truck that I have a relationship with, and so just trying to figure out what could be a successful apparatus to support small business. So so it's a lot of discussion.
So when will this become for council, or can we, since you're under a time crunch here, I mean,
February 3rd, so it'll be the week from Thursday meeting.
okay. Is that going to work for you? Will that be enough time?
I believe so, yes.
Okay. Then it's been moved to second to for this on to full council for consideration. All in favor of that motion signify by saying aye.
Aye.
Any opposed? And that motion unanimously carries. Thank you. Appreciate it. We're at the end of our agenda. So without objection, I will call this meeting adjourned.
Thank you, everyone.
Thank you.